So we're going to talk about today, we're going to take a look at trader development process and our unique take on that. And for this, we're going to focus on five key areas of trader development and also how we approach them and how we approach them also from the perspective of our own platform. Now, whether we end up working together or not, I'm fine either way, but basically the goal of this webinar today is really to discuss the nuances, the reality of trader development, right? What it takes to become a trader, okay? And what we're going to be talking about here is very much in line with what it takes for professionals to be a trader, and you'll see how we work with professionals later on. Now, obviously, technique, strategy is obviously a big part of becoming profitable as a trader, but we're actually going to go through 5 distinct areas of trader development, many of which are overlooked. And I know this because I talk to a lot of traders, and the number one question is always, where do I get in? And very few of them ever get past that point. Now for us, this is just one area of focus. And the traders we deal with get past that point pretty quickly, or are reaching out to us if they can't, so we can kind of figure out what it is they're having issues with. So at the end of this webinar, you'll understand that getting to profit isn't actually a big deal. And it's also not your end goal. It's like a milestone in a process of continual improvement. You know, you can take what appears initially to be a small trading edge and the small profit and push that advantage instead of having this search for huge winners, you know, this kind of search. Everybody's promising these massive winners, but we all know, we buy into it, they never materialize. Okay, so this isn't so much about having a lot to learn. Trading really isn't about having a lot of knowledge, but it's really about getting good at one thing and then really squeezing that edge for all you can get. So not only can you look forward to a time where you can get to profit, but you can also look past that time to when you're really pushing the advantage you've got in the market. Now, one of the main problems that stands between traders and profits is just a lack of focus, trying to make too many trades because they're so focused on the end game. You know, the end game might be a specific monthly profit, might be a number of ticks or a number of pips each day. Now, this might sound like a stupid question, but almost every retail trader I meet is trying to master a large range of market behaviors. And that leads to losses that make it impossible to scale up in size because you're losing money. Now, the merest suggestion that a trader should master one setup first, I usually find it makes them go all a bit quiet and they start thinking, well, if I only have one setup, you know, how am I going to make my 20,000 a month, my 30,000 a month, or whatever my goal is? But the fact is, if you can't master one setup and make it profitable, you will not master 2 or 3 or 4 or 10. And it's that focus on many setups that's actually going to cause you to fail. Okay, so scaling up can make one setup, even a scalp setup, really, really profitable. But getting those first profits isn't even your end goal anyway. You know, adding more markets, adding more setups later is of course possible, but everybody in trading, every retail trader, they want to run before they can walk. Now, most traders would actually prefer to continue losing money than focus on one setup and turning a profit at it within a period of, like, say, 3 or 4 months. Because the fact is, in 3 months' time from this date, it's totally your choice. But from 3 months from now, you could have mastered a setup, right? Just with focus, trading it profitably, and be actually fairly relaxed about your trading. You know, you go sit down at your desk each day, you do your trading, you switch it off, and then you actually do something else. Where a lot of guys and girls, they're just stuck in this really stressful situation of I'm trying to learn, what is it all about? Now, of course, not everybody has what it takes to be a trader, but it is not rocket science either. So let's just see how it is you really get there. Now, I think it was Jim Dalton that first introduced traders to this Maslow's 4 stages of learning. Now, I don't really agree with stage 1, okay, because I think most of us start trading knowing that we don't know anything. But it's this last stage that that traders struggle with. They fight, they try and avoid it. And the fact is, it doesn't matter what you learn, right? Think of anything you've ever learned, it becomes automatic. So whether it's driving, writing, playing tennis, martial arts, walking, languages, everything you learn to do unconsciously, okay? It's you doing these things, it's just not consciously. It's just an unconscious part of you. It's kind of your own inbuilt autopilot. And it's something we rely on all the time. In fact, our ability to actually do things consciously is actually fairly limited. And as a good example, If you just think to yourself of a phone number now, a phone number of a friend that you've shared or a phone number of your spouse, and just say it out loud to yourself. Now, if you're human, you probably split that number into chunks. So I'd read a phone number out like 0871 385 195. I split it into 3 chunks of numbers, as opposed to just one long string of 10 numbers. And that's just down to the way we split things into chunks as we bring them into our conscious memory. And it's the reason that we can't consciously process 50 incoming data points at a time. So our conscious processing abilities are actually quite a way behind those kind of learned unconscious skills. So most of what we do unconsciously. You're doing it now as you process my words, but despite the overwhelming evidence of this, literally everything else you do in life, traders absolutely refuse to believe that that subconscious ability, that learned ability, could be something used in trading. And that's why we see attempts for people to mechanize trading, to kind of create rigid entry rule sets to trade off, to basically set yourself up for failure by not treating trading like everything else you ever learned. Now, at Jigsaw, we recognize the fact that trading must become something we do without much thought, that we have to go through a learning process to get us there, and that all the magic bean systems in the world will not help us avoid that. Okay? There is no system you can buy today and profit tomorrow. Okay? Now, I know that some of you're already feeling a little bit uncomfortable with this. You know, this sounds like a bit ethereal, like some sort of hippie concept from the 70s that you could actually develop trading as an unconscious skill. But this is nothing to do with trading, right? This is just to do with learning, right? So for those of you who think I'm being a bit too spiritual about this, just have a think back at everything you did so far today and how much conscious thought you had to put into those tasks, okay? Now, how we learn is the key to success. And after working with many prop firms and many prop traders, we've defined 5 key components of trader development that we think are missing in the retail world. Many of them are, anyway. Now, most traders are really only interested in 1 or 2 of these, and that's in many ways holding them back. In fact, new traders are often only interested in where do I get in? Where do I get in? That's all they want to know. Where do I get in part of trading? Now, these are not necessarily the 5 things you will need to use on day 1. So these components will help you develop over time to your first profits and beyond. Now, of course, the cornerstone is learning, both in terms of what to learn and how to learn. You know, how to make information stick in your head, how to develop that unconscious expertise. You don't need to get your education from Jigsaw, but the people that do come on with us are actually given a path to learning how to read tools, how to make that automatic. And that's something that we give for free. You know, and I think of it like buying a cabinet at IKEA, right? It's going to be pretty useless without the instructions, without the assembly instructions. So when you get the tools from us, you have 2 choices. You can ignore our advice, just turn the tools on and try and trade off them. Or second, you can take a week, go through the drills we give you so that you learn how to process that information in real time. It doesn't take a long time, and it's very much in line with the way professional proprietary trading firms teach their intern traders. And when I say intern traders, I'm talking about traders that have never ever traded before, that they get profitable 3, 6, 9 months, just kind of depending on the personality. Okay, so this process is just very much in line with how we learn. You learn the skill, then you take it back to your trading. Now, of course, tools are essential for any trader. The focus of our tools is to give you what you need to make a decision and basically forget the rest, right? And then to make that experience as pleasant or fast, as comfortable as possible, you know, fast, reliable, user-friendly. So when you're designing a trading platform, how do you decide what to include? Well, you know, this slightly overweight gentleman here is me stealing a seat on the desk of a prop trader at one of the leading prop firms in London. Okay, now you can see this is a professional trading firm. You can see all the center screens here are all depth of market. Okay, there's some longer term charts here, and that's it. There's no indicators, there's no Fibonacci's, there's no this, there's no that, there's no MACD, there's no Bollinger Bands. They don't use them. Okay, now what you don't see is this. Okay, now I can't tell you how many times I've done screen shares with home traders and seen this sort of things. You know, 6 screens of charts, hundreds of indicators, you know, so much information that it literally would be impossible to make a decision based upon it. Okay, Now, traders really don't like it when you mention this either, because you tell a trader like this, oh man, you just got too much crap on your screen, and it goes over about as well as telling their wife is ugly. Now, the markets we trade can literally only go up or down. Okay, that's how simple trading is, right? You could flip a coin and get it right half the time. Now, I know it's not easy. I said simple, I didn't say easy, but this kind of thing, charts like this, it just makes it harder. So if you speak to professional traders, they'll tell you a number of things. They'll tell you that most of them trade off the depth of market. They'll tell you half the battle in trading is simply just getting out of a trade when you know you're wrong, something that retail traders have a really hard time with. So what we did when we built our platform, we built our platform solely on techniques that prop traders use. So we built our platform based on the techniques that the guy who's trading this in the professional firm in London, on the techniques he uses, right? Nothing from the retail world, just proven techniques that we know work in the prop world. Sure, there might be other stuff that works, but really we don't care. If we can bring something that works, that's all we really care about. And then what we do, we try and push the edge of those techniques as much as possible. And we try and make improvements where we see, improvements might be made without, encroaching on the edge. And as we meet more professional traders, there's always going to be some subtleties, we can bring to the product to help all traders, or maybe some traders that don't have such good short-term memory skills, or maybe traders that are focused on a very specific technique. And that's effectively how our product evolves. Now, another key factor in trade development is analytics, right? The ability to slice and dice your trade history so it's really clear where your edge actually is. And this is an essential part. If you don't know where you're making money, if you don't know where you're losing money, you're not going to make more and you're not going to lose less. Then the environment, being immersed in a trading environment, mixing with other like-minded traders on a daily basis. And finally, accountability, because very few traders are disciplined enough to get through a period of sim trading without doing things like resetting your account after a bad day. And bad habits like that tend to get embedded, they repeat, and they stick. So those are the 5 areas of focus, 5 keys for trade development. So let's just look at the tools first. Now, most people know us for our plugins for various trading platforms, but we now have a standalone platform called Daytradr. Now, if you go to a prop firm like I do, you'll generally see one of a handful of professional trading platforms. You're going to see TT, CQG, Stellar. What you won't see are the trading platforms that retail traders are using. I'm not going to name them because I'll probably get sued. Now, there's a few reasons for this. First of all, retail trading platforms are bloated with a lot of irrelevant stuff that is there purely for bait for retail traders, and it makes the platform slow. So if you've ever wondered if indicators work or not, just count the number in your platform, because if one of them worked, they wouldn't need the other 500. Now, the other thing is many retail platforms are just considered too unstable for a professional trading environment. They don't work all the time. They don't stay up enough. But mostly the retail platform providers don't really understand what professional traders do, right? So they just can't use them, right? They just kind of miss the point of what trading is. So with Daytradr, we made a platform that was truly multi-threaded, lightning fast, light on memory, and from the perspective of prop firms, it's not being treated as a retail trading application. It has the functionality they need, none of the magic beans they don't, and it has the stability and the performance they expect. It is institutional grade. Now, we already mentioned that most prop traders primarily use the depth of market to enter. And those entries are mostly taken based on the size of trades being executed and the pace of the market. And again, this is another area a lot of traders have issues. They don't actually want to believe this to be true. Because humans love predictability. They love being in control. And the idea that you have to kind of tune into something, get into the ebb and flow of a market to really understand who's in control, just kind of feels wrong to many people. That's why they want the indicators in the charts. When this line crosses that line, I get in, otherwise I stay out. Very, very simple, doesn't work, right? Now, many traders look at this approach and they say, right, oh, that's too difficult. Now, I talk to these people all the time, and many of these traders, they've spent 5, 10, 20 years for some people trying to make a profit reading regular charts and failing. Now, there are plenty of people out there selling easy ways to trade, but we all know they don't work, right? You're going to get to a limit of how many you buy before you realize it's BS, yeah? So what I ask traders who look at this and say this is difficult, I just ask, well, what is easy about trying to trade off charts for 5, 10, 15 years and getting nowhere, right? So for now, let's just go with the idea that trading off the depth of market, primarily by the size and speed of trades hitting the market, is actually the easy way to trade, right? Because prop firms certainly don't choose this approach to make it harder for their intern traders, right? They plug people straight from university, stick them in front of a desk, and actually they don't even need a degree. You know, there's a lot of Cockney Barrow boys in London that are just cheeky lads that get a place in a prop job. They've got no trading experience before at all. And they have to teach these guys, and they teach them these techniques. And they do it because it's the fastest way to get to profit that they know. After all, those intern traders are 100% cost to that firm until they're making a profit. So the way I like to think about this in terms of reading order flow is it's similar to riding a bicycle or motorbike or driving a car that has gears. I apologize if you can't drive a stick shift, but when you're driving a stick shift, you change from one gear to the next based on a number of factors, but you're not actually thinking about any of them when you do it. Okay, it's done by feel. You can feel when it's time to change gear. It's just second nature. Not only that, but you can jump into a completely new car, and within a couple of minutes, you know how to do it in that car too. I mean, the reality is it's done based on speed. It's done based on the incline of the road. It's done based on the weight of the vehicle. It's done based on how much shopping you've got in the back, the number of people on board. But these things are not at all on your mind when you do it. You're driving along, and the car feels like it needs a gear change. And that's exactly what the market does. So what we have here is a Jigsaw Daytradr platform. Just quickly go over what's on the 4 windows. So first of all, the depth and sales, that's our dome. And basically what we've got here, trade column here, which shows the orders, P&L, if you're in a position. We've got alerts column here, just a place to put some notes, any comments, any text. I can't spell, so I use just X's. We've got a volume profile here, which is very, very important for intraday traders. Purple showing the value area, pink for point of control, and orange for something called VWAP. The white area is showing that showing what we're currently trading right now. We've got the price, obviously, with the position, location, and direction highlighted. We have the bids. These are limit orders. These are people waiting for somebody to come and sell to them. We have the offers. They're limit orders waiting for somebody to come and buy from them. And then we have the current trades, which shows basically what's trading into the bids and offers this time around. Not really that important that you remember all this terminology. Now, over on the right, we have something called the auction vista chart, which is very similar information, but showing historical information. So as normal, we have time along the bottom. The orange bars show us where we traded. Above us are the offers, the sell limit orders, with the white areas being the highest offers. Below us are the bids, again, with the white areas being the largest bids, and the circles, very, very important this. The circles represent abnormal amount of size trading at a price, right? It's colored red and blue to show the proportion of buying versus selling. Of all the things you can see here, that is the most important. Now below this, we have a cumulative delta chart, which kind of shows a running total of buyers versus sellers. Very, very good to set the bias in the market. Then we have volume down here, total volume with the buy quantity in blue and the sell quantity in red, so you can see the balance of trade. And there's a visual representation of market depth balance. Now, one thing you'll notice when you use the tools is there's not actually many settings, and the whole point of any trading tool is to give you information you need to make a decision. And the moment that depends on you having to choose the right settings is pretty much the moment the tool provider stops taking responsibility for what appears on your screen. So we think that if you have a tool that can help you read the market, it should work out of the box on any market, because this is 2017. Software should be smart enough to do that. So with Vista, there's just 2 settings to make. First of all, the interval, because different people want to look back different times. I simply set the interval. There's no magic interval. I just set the interval so I can see the data back to the start of the session. And then the circle tuner, because different kind of markets, they do have some different volatility profiles. So sometimes we have to tune a few of the circles out. So on crude oil, gold, we'd set a circle tuner of 4. So what's the story this is telling? And it is like reading a story. Mostly, it's quite often a story of speculators getting stuck and then the market rolling over as speculators see opportunity in the opposite direction. Because most of the time, the markets we trade are driven by short-term speculators. Okay, now we do get one-way days that are driven by fundamentals, but they are not the norm. So it's speculation and it's fairly short-term. And just like all of you in the room, they don't really care which way the market is going, up, down, as long as they can profit. And this is why the markets swing up and down intraday so much, with good opportunities on both sides. It's not anything to do with fundamental repositioning through the day. It's just people speculating. So we know that speculators will switch sides very quickly, and we know that because we're speculators and that's what we do. So if you see profit in the other direction, you'll just trade in that direction, right? So what these tools do, they just keep you on the right side of that switching throughout the day. Now on this screenshot, the elephant in the room is this 626 bids here at 51.97. So we can see here on the depth and sales, and we can also see here on the auction vista, and we can see that relative to everything else, that is massive. Now this is the overnight session. It's probably about 3 a.m. Eastern. In itself, that does mean there's a load of buyers there right now, but it's not a reason to buy it on its own. A few years ago, when we first saw these order flow heat maps come out, there were a lot of so-called experts telling traders to buy in front of this depth. And that was a little bit unfortunate, because if you asked any professional trader what would happen if you did that, they'd tell you it's a good way to lose money. So these large bids are often just people trying to fool you into think there's buyers there. So it's a good heads up, but it's not much more. Most of the time you'll get down there and they'll get pulled out of the way. Absolutely doesn't mean the market will hold, but it does mean it's an area of interest. Okay, so even if this is real, it still doesn't mean the market's going to hold. So this could just be 626 buyers that want to buy because they're hedging for an airline, right? So it doesn't mean the market's going to hold. Okay, so that on itself will not turn the market around. But what does turn the market around is stuck traders who get stopped out, leading other traders to think, well, maybe the money is now to the upside. So what we can see here is two circles, which represents an abnormal amount of trading at just a couple of prices. So we can see it here on the circles, and we can also see it here in the volume too. We do have high bids below us, and then we have a lot of selling here, selling that did not result in a price moving down. Okay, now those sellers, we see a predominantly red circle, that's predominantly selling. Those sellers are potentially stuck. Now I say potentially stuck, not definitely stuck. What we need now is for the market to move up, and for some of the traders that got engaged here to get out of the way, and that's where we focus over here. So you have two choices when it comes to entering a scenario like this, right? You can wait for the market to move above these circles, and once that happens, the probability of a move up increases massively, right? Because you've got people stopped out. The shorts are starting to get stopped out. People just go on the buy side. Yeah, or you can focus over here and watch the pace of trades as it trades around where these circles are, and use that feel of the market to see if it's going to run the level. Now in this case, it was a slow time of day, and in a slow market you have kind of a lot more time to get out of the way. So the entry at this point was more about just seeing the market uptick into the circle area, but also knowing that it's a fairly slow market anyway, so the chance of it ticking back against me is pretty slow. Now, as you can see, the current trades are blank clear here, and this current trade meter here is also clear. That's just because it resets when you enter a position, so you can actually track the order flow is against your or on your side once you enter that position. Okay, so where do we go? What we did, we actually moved up 4 ticks. We can see we moved up here, but we're back to the entry price. Now, a lot of people would be, well, what do I do? Do I scratch at break even? Do I stay in, or what? Now, what we can see is since we got in, we had 114 sells and 147 buys since entering. Not a lot of trade, but this is overnight. And what that's telling us is there's no strong order flow against us. The buyers are slightly dominant, so there's no need to scratch a trade if it comes back down. Now, while we do have a screen full of information here, what we're not trying to do is read everything all the time. So this meter up here, just something I use when I'm in a trade. Otherwise, not at all interested in it. Okay, so almost all of the elements here I'm using to just kind of refine the entry and the early part of a trade. If I can get on side a decent number of ticks, I just forget about it all and let the trade run. Now the stop I have here is at 51.97, where all the bids are. And that might seem a bit silly. After all, surely it's better to probably put the stop one tick below that. Well, if it was a regular stop, I would agree. But in this case, it's a volume stop, which means the stop will only fire this 645 gets to 50 or below. Okay, very, very useful type of order management. Okay, so this is where we ended up, and you can see on the way up, we also had a number of areas where we had abnormal trade. You know, areas where it took an abnormal amount of buying to move through the price. So the rule of thumb is to not panic when you see a lot of trade at a level. The price has to actually move back against these traders to stop them out. So you need to see a bit of aggression on the other side of the market. So the volume at price absolutely is a potential stopping point, but it's a move against volume at price that's the potential turn in the market. Now, no, you don't actually have to be trading turns in the market all the time. You know, in a slow market, you actually have fewer momentum moves, but in this case, the current trades column over here shows us just really, really clear upside momentum, as does a strength meter with now 1,200 buys and 700 sells. So it's actually easier to trade momentum moves after a turn than trying to trade the turn itself. If we just quickly go through this one, this is the same day around 9:40 a.m. Eastern time. I'm just going to walk you through this quickly. What we can see here, we can see the market came down. We had an area where there were a lot of offers, and again we saw a massive amount of trade on the sell side, but price couldn't move down. Sellers got stuck. Market moved up, and you can see that kind of parabolic move up that started. That is when people's stops are getting fired. Okay, so if you want to know the stops are, you first got to know there's a lot of people engaged. Then the market comes down, right? We get another area where a lot of people traded, but this time it actually moved back down, and we got another area where a lot of people traded. We didn't move back up through it, right? And finally, we moved down to another area of high liquidity, and again, look at the amount of trade. Look at the amount of trade. We've got a lot of trade there, and again, markets hit this area. We've got a lot of circles, a lot of size traded, and again, this doesn't mean we can get in, even though we've gone down to 51.79, and now we're starting to tick up. We want to see these traders get stopped out. Okay, so what happens? We lucky actually in this trade, we actually got the market to pull back a bit. So what we're seeing at this point, the market did indeed push up through those sellers' positions. We actually came down and pulled back, got an entry at 51.89. Very nice of the market to do that. Usually wouldn't expect a pullback. Certainly when you're looking at a market like crude or gold or DAX and you start pushing up through an area of high volume, you really might, you're not often going to get a pullback. You're often going to really start marching up, and that's in this case we ended up actually a nice smooth move up, and we can see again a couple of areas of where we've got an exceptional amount of trade. But again, very simple trading. All we're looking at here is looking at where did we see the last area of high volume, and when it breaks, speculators just simply think there's more money to be made on the upside. These guys who traded all the way down here, you've probably got a word for these guys who traded all the way down here, that sold all the way down there, and the word you've probably got for them is sellers. Okay, and what I would say is they're not sellers. Anybody who's sold on the way down here is actually now a buyer. So anybody that's short on the way down is holding those short contracts, right? And then watching the market go down. It's great. The market's going my way. This is brilliant. I love this market. And then suddenly it moves against people, right? And then the market starts to move up and they have to unwind. They have to get rid of those long positions, right? And next thing you know, people saying, well, it doesn't look so easy to the downside now. We'll play it to the long side. So that's just give you a brief idea. I could take you through lots and lots of trades, but just to give you a brief idea of what professional trading is really about. It's really about understanding where other people are positioned and what the market is doing right here, right now. Now, you don't need to use these tools. You don't even need to use all of the tools. But what I do believe, if you can't fit all the information you need to trade on one screen, then it's too much information to trade on. So this is what I use personally for my short-term entry confirmation and managing the early part of the trade. Okay, now trading, we said, is one part, but with more to trading than just getting into and out of the market. And what we have here, we have something called the peak performance dashboard, which is where you analyze the results of your trading, right? So as you trade, the platform sends the results of your trading to the back dashboard across a secure connection. And you can see what we're doing here. We're actually comparing a couple of 2-week periods, because the tools allow us to compare periods so we can actually see if one period of trading better than another. Now the P&L section here shows running P&L for each period, and the tool allows us to compare periods so we can see if we traded one period better than the other. The green line is showing me the current period, and the pink line is the previous period. Now you can move the cursor over any of these graphics here if you want to kind of see the exact numbers. Trade distribution, probably something that none of you are looking at right now, shows you which times a day you traded the most frequently, and also which times a day you made the most money. So as you can see in this chart, this user had a net gain for most periods, but at lunchtime here, they made a loss, and at 3 a.m. they made a loss. Why they were trading at 3 a.m. I don't know. The 3 a.m. though is an outlier because there really wasn't a lot of trade there anyway. Okay, the lunchtime trading is most likely a cause for concern, because we know the market slow down at lunchtime, and if the traders still trying to push the advantage there where it's really not, it's time to pull back on that kind of trading. You know, we can also see that Thursday is the day that was the most profitable, and that Tuesday is the day we traded the most, but really didn't pay off so well. Now remember, this is only a few weeks of data, so you know you're not really going to analyze day of the week just based on 2 weeks data. Now, in terms of the instruments traded, you know, we can see that for the current period, most of the gains were made on the Bund, right, which is a German interest rate product. What's interesting though is that the 10-year here, oh sorry, the 10-year, the ZN, 10-year treasuries, accounts for almost half of the losses, but only about 20% of the gains. And as these here are the instruments with the most trades, the Bund and the 10-year, what we can do if we want to kind of see how we're doing on the other instruments is just kind of filter those out, okay? And the picture changes a little bit when we take those out. So we can see, for instance, that the crude oil trading seems to be really a lot less efficient than some of the other instruments. And we can also see that the Euro Stocks FESX here is on the losses chart, but there's no profit on it anywhere else. So let's kind of zoom in to what we're trading on the FESX. Okay, here we can see the statistics for the FESX. So it's not looking ideal, but perhaps, you know, too few trades to draw any conclusion. So we could say, okay, let's look at FESX over a longer period. As we can see, overall, this Euro Stoxx trading is not paying off for this trader at all. So statistically speaking, it's not that many trades, but if you consider the volatility of the FESX compared to the other instruments that were showing a profit, it's just likely this trader, it's just not his kind of instrument, right? Might be suited to more volatile markets. Now, as well as the charts, we also have sets of statistics, and most of those you'll probably know. And again, those are going to reflect the current filtering, date ranges that we've got selected, so we can exclude dates, accounts, instruments, you know, see how the results would have been impacted if we changed our behavior. So this dashboard gives you the chance to slice and dice your trading data very quickly to unearth patterns in your trading that you simply wouldn't notice in the heat of the moment, and that you certainly wouldn't notice just from your P&L. And it's an absolute essential, because at that time of trading, these patterns just aren't there, okay? So we recommend doing trade analysis at least once a month to help you fine tune your trading. Now, the other key to trade development we talked about was environment. Being around other traders is a huge benefit to those in prop firms. Not so much for the obvious, oh, where do I get in question that you all want to ask, but for nuanced stuff like, you know, oh, the S&P's moving with crude today, or, you know, market depth's above average. You know, people really observing things from a different perspective. And the Jigsaw chat room is where we bring traders together. Now, this is not a copy my trades room, okay? This is a serious trading room. It's to chat about trading and the markets in general. Now, you can chat publicly here. You can chat privately with text, audio, video. And the room's most active during the US morning session. Now, we do discuss trades. We all discuss entries and exits, but the intent is not for other people to copy the trades. The people in the room certainly don't want to be under that pressure. So the traders here are all using order flow, but they're not all using the same techniques. They're not all entering for the same reason. They're not all entering on the same markets. You know, we've even had occasions where one trader's been long, somebody else has been short on the same instrument at the same time, and they both made money. The key here is to exchange ideas and opinions. It is a community. This is what you'll get in a prop firm. So for a newer trader, it's good to see what sort of activities and events are on the mind of those with more experience. It's good to see the trade frequency of other traders. It's good to see, where are people getting into positions? Someone might get into a trade, a newer trader asks why, and there'll usually be an answer given. And then, of course, there's times when the market is just moving sideways, doing nothing, and the discussion will be fairly quiet. So the room is a really good atmosphere, a bunch of regulars that come in daily, and it does a really good job of replacing that camaraderie you would actually get in a prop firm. There's just a lot less bad language. Now, how do you make traders accountable, right? Or how do you discourage people from resetting their sim counts over and over without any penalty? Having them in a situation where they behave badly and over again with zero consequences, effectively preventing them from learning from their mistakes. Well, what we did, we decided instead of using a stick, we'd use a bit of carrot. So what we have here is the Jigsaw Leaderboard, which is basically a trading competition. And we run this trading competition every month. This is Mr. Gecko here, Laszlo from Hungary, is the winner for October. He made $20,000. What we do is this leaderboard, it does not rate you by P&L, right? You can see this. We've got P&L at the bottom here with $4,000 profit, and we've got a whole bunch of people above him with less profit, not particularly significant profits. But if we look over on the right, there's a rating. Now, this rating is based on the go live criteria at a London prop firm. Okay, so if you go to a prop firm, 3 months your training's up, or 12 weeks your training's up, usually around there, and then you have to earn your live account. You earn your live account by sim trading, and you have to fit certain criteria. You can't have more than 3 stop out days in a week. There's all these different criteria. They reward you for frequent trading. They reward you for scaling into a position. So what we do, we actually use that same rating to rate people by consistency, right? And it's the most consistent trader that wins. But also, usually it's the most consistent trader that's most profitable, okay? Now, there will always be people who try and swing for the fences to win the contest, but it doesn't work, because if you swing for the fences and have those wild swings in P&L, you wouldn't win the competition. So at the moment, we're paying the winner of the competition $500 a month. So it's $500 every month that we pay to the winner. But the bottom line, it's not really about making money. It's about seeing how you'd rate if you're in a professional firm, seeing how you rate against other traders, seeing other people using the techniques you're using, making money, right? And actually having a vehicle for self-improvement and giving yourself a real measure, and having some kind of penalty if you actually, mess up and reset your sim account, because you can't reset your leaderboard account. Now, the final key to success is education. Now, for years, we've had lots and lots of people. If you go and search for us about our education material, you'll find nothing but good things, and you'll find them all on public sites, trading forums, that kind of thing. Now, for years, people have been commenting on how great our videos and webinars are. So what we've done, we've formalized this into 3 levels. The beginner level is 10 hours of videos covering the basic theory of order flow, how to apply it, and drills to get started. So this is your kind of must-have information for anyone looking to use order flow in trading. So taking trades from zero knowledge to fully understanding order flow as it's used in the proprietary world, and how to improve their trading. The advanced course, which is 7 hours of training, it brings in more advanced concepts, and this is more meant to layer in onto your trading over time. So for example, there's very specific trade management techniques, there's scalp entry setups, there's volume process and that profile analysis to give you additional edges to exploit, as well as maximize your existing edge, right? Now that 17 hours isn't meant to be watched in one chunk, right? And try and cram all into your head. It's meant to go through slowly and bring change into your trading gradually, and make sure you lock in every improvement before you go to the next. Now, these 2 courses are really for people who have got something they can improve, right? So you've got something you already do that you think needs improving upon. But some people haven't got anything, right? They've got no cake to put icing on. And for that, we have the institutional course. And that institutional course comes from a proprietary trading firm in London, right? It comes from a professional trading firm. It comes from a firm where people are making 10K a day, not 10K sim ticks, not 10K on some dodgy trading site. This is an institutional trading firm. So we decided that we would take their course and kind of package that course and sell their course. That is a complete end-to-end training course that takes you from nowhere to being able to make your first profits, right? And it's using techniques professionals use. Now, on top of this, we also kind of do a group therapy session, because there is, one thing is learning how to trade, but there's all kinds of nuance when it comes to applying those details in, let's just go on one more slide. There's all kinds of nuance when it comes to applying what you've learned on the live markets. It doesn't matter what you tell people about trading, what techniques you teach, you know, what you teach them, you're never going to teach them everything. And this email I got last week from a woman in the States is just typical of kind of just wires getting crossed, right? So she's doing really well. She thinks she's doing really badly. The reason she thinks she's doing really badly is she's trying to apply the techniques that she's got when it's not appropriate. She can even see it's not appropriate, but she's made the presumption that professional traders trade even when it's not conducive to trading, right? So that's not something I'd have felt the need to teach, not something that's in one of the courses. Seems obvious, but there's a lot of things like this that traders kind of mispresume. So one of the things that we give at Jigsaw that very few people are able to give is a helping hand, and to be there for traders all the time, to send an email, to have a Skype chat, to chat in the room, to have a phone call, and actually just sit down with traders that are struggling and work it out. We don't charge for that, right? We're a community of traders and we help each other out, right? And the simple reason we do that is because you can't just teach everything. Now, as I said at the start, trading isn't just about where to get in and where to get out. It is a skill. And like many skills, there's lots of different areas that can help you improve. Now, new traders tend to be very one-dimensional. There's just one question on their minds: where do I get in? You're in a prop firm, that's just one aspect of trading, or just one of the things they're teaching that trader as they develop, and then everything comes together and they become profitable, okay? So they teach market behavior, and then they worry about how to exploit that behavior. You know, because sitting at home in front of your trading platform, it's a hell of a long way from being in a prop firm in terms of information, environment, learning environment. And that's why people coming to me, you know, sometimes after 20 years of trying and failing to trade, but prop firms get their traders profitable in just a fraction of that time. So bringing some of that prop attitude, that prop benefit to the retail world is just one way that companies like Jigsaw can help traders like you. Now, what I'd like to do as we close out, I have to say that this technique is not for everybody. Order flow is not for everyone. In fact, trading is not for anyone. But any trader that's not making progress right now, if you have not made any progress in your trading in the last month, then you should take a serious look at this, right? And you should take a look at it our way. Because when people adopt order flow, the overwhelming experience is of seeing what's going on in the market for the first time. They feel like a veil has been lifted from the market. And within a few weeks, traders feel naked trading without it. But is it going to help you? Well, it's kind of hard to say without knowing exactly what you do. So our offer today is a one-on-one trading discussion. You just go to www.jigsawtrading.com/review, and we will have a 20-minute one-on-one session where we talk about which markets you trade, which you prefer and why, what your goals are short-term and long-term, what you've tried so far, how well these things work, what you feel you're missing and why, and then we'll tell you straight if we think order flow can help. Okay, quite often it can't. We do probably about 75% of the times it can. And we'll also suggest a plan of attack for implementing it in such a way that you only move forwards and not backwards, right? There's no obligation to buy anything after that. Absolutely up to you whether you take our advice or not. And for that, the price is just $1. So for many of you, it's going to be the first time you've had a one-on-one chat with somebody that works extensively with professional traders, okay? So to get the most benefit from it, if you do sign up, recommend that you record the call as well so you can replay it later, because it's going to be a lot of information there. So with that, I'm going to hand it back to Renee, and please take advantage of that. I would love to have a chat. Can usually get through about 10 people a week, you know, aside from my other trading and the Jigsaw community obligations. So thank you all for listening.